Good morning, everyone. Good morning, everyone. Welcome to the 24/7. My name is Niharika Valia, and I'm with you with the area of JAIIB 2023, and I'll be talking about the accounting and financial managers with you. So today I'll be taking up with the next class of AFM. But before we move forward, I hope you have reviewed our video regarding the change in syllabus. The entire new syllabus has been discussed, or specifically regarding AFM. So if you have reviewed it yet, then it's good. If you haven't reviewed it yet, you can review it on our channel. And in that particular area, I've discussed the area what are the significant changes that has been introduced. Number one, the module A has got everything which was earlier there in module B and was in the part of module C as well. So module A has taken over, and everything which was there in module C has been shifted towards module whatever was there in module A has been taken to module C, which included the interest and annuities, YTM, cap budge. So it was all there in module A. Now it has been shifted to module C along with ratio analysis. So what I can suggest you is the module C is going to be the total numerical area. That means this would give you most of the 2-marker or case study questions, while module A and module B is going to have more, especially module A is going to have more questions regarding the basics of accountancy. And the last module, that is the module of accountancy, cost and income tax, right? Income tax, GST, as well as standard and marginal costing. Those topics are all the topics of module D are definitely a little tedious. So if you haven't started your preparation and looking for my video for the first time, then what I can suggest you is kindly do not procrastinate, do not stop here in your preparation, because yes, the syllabus this time is definitely vast enough. It is going to take a good amount of time even in our classes to cover it up properly. So I'll always say that it is not advisable from my side that you take up the classes in such a way that it's fine, that you can take up the classes later on, you can have a relaxed moment right now, because it will not help you. Till the time you don't go through a self-study program, you don't really specify that first of all I'll finish it off with the syllabus that we are dealing with. For example, if you have taken up our courses, and first of all you should finish our courses there. So first of all, review the Adda 24/7 app and finish off the syllabus there, and then give yourself at least a month or 1.5 months for your preparation, so that you can go through the further details, because this is required. This is the need of the hour, that if you get your time to self-study, only then you can have an edge over these topics, because the topics require proper practice. Right, so this is what I can suggest you. Then kindly go ahead and review the syllabus as early as possible, so that you yourself know that what are the basic areas where you need to work upon, because ultimately we are the best people who can judge the capabilities. We know our potentials, we know how much we can learn from the other things. Our aptitude or attitude is something that determines how we're going to clear the examination. So all I can say is, before we actually proceed further in the class today, please go through the syllabus as early as possible and start your studies right away, because the more it is like, if you take the start right away, then it would be easier for you to execute your plans. Otherwise you'll be stuck within the area when you are going to study, and when you're going to have your revisions, when you'll be going through the mock tests. So it is going to take a toll of you. So it's way better that you start as early as possible in order to finish the syllabus in time. Then you get the time for revision, for the mock test series, as well as that helps you to find out what exactly are the areas where you can work upon, because there would be areas which would be weak, right? So the strengths should be taken up in such a way that you will gain more marks, and the weakness has to be covered. But for all this, you need time, right? Okay, so here comes the first question, everyone. The first question says the trading account is prepared to find out the GP or GL, and net profit or net loss, or none of the above, or cost of production. When we talk about the trading account, it's a nominal account which is prepared to note down. It's an account which notes down whether you are in the trading business, or when we talk about the raw material to finished goods process. So if you're preparing the books of accounts, then you are worried about the fact, how are we going to make money out of this business? So that is what we'll be looking forward to, right? So in this case, what a business exactly does is it looks forward towards the fact that how they are going to earn the money. So in this case, number one, they manufacture the products and then they convert the raw material into the finished goods. How do they convert it into? That is from GP or GL. This is what they're going to face when they are producing. Once they have taken up their direct expenses out of it, then whatever they are left with is indirect expenses, right? First of all, I produce the thing, I'll have to go through the production process, and then once the production is completed, then I'll be selling it up. So basically, first of all, let's get done with the production process and then look forward towards the sales, right? So it's gonna be gross profit or gross loss. In the trading account, it's a nominal account. The trading account, it's a nominal account, an account which deals with either the profit or the losses of the company. Then arrange the cash, building, goodwill, debtors and machine in the balance sheet in the order of liquidity. When we talk about the term liquidity, it means how liquid our assets are. Liquid here means whether they are convertible into cash very easily, or will it take time to do that. So that is something that we define here. Is it going to be debtors, then cash, then building, then goodwill, then machine? Or is it going to be cash, debtor, machine, building, or goodwill? Or cash, building, goodwill, debtors, cash. Then we have machine and cash, goodwill, debtors, machine, and building. Okay, when we talk about this entire area, it is based upon how easily can we convert it into cash. See, cash is always easily convertible into cash. So most probably the first one is already eliminated. But the fact is, building as well as goodwill, these are both long-term assets. So technically, both of these assets are used for more than a year by the business, while debtors are normally paid off within that stipulated period of time. So basically, debtors, machine, building, and goodwill. This is something which we define as something as in the order of liquidity. The current assets are easily converted into cash, because the current assets are those assets which can be easily converted into cash within a time span of within an year or within one operating cycle, whichever is longer. That is what we look forward to. That is B, the cash, the debtors, the machine, building, as well as goodwill. Which of the below is a position statement among the following? Which one is a position statement? Position statement talks about, if I talk about your business and I ask you that how much your business is exactly earning, that is what I'll clearly ask. So whenever I ask you such questions, what will you do? You'll provide me the details that the business is working in this way, or this is what the business is making out of their goods and services. So basically, whatever they're providing. So that means I'm going to ask your net worth. What is it that the business is making out of their efforts that they're making? That is basically trial balance, profit and loss account, balance sheet, or bank reconciliation statement. Position statement, number one, it's a statement. So profit and loss is an account, so it's out. Trial balance is a statement, but it includes a lot of things, and it's just like the list of marks. It's like I give you a report card. Your report card is kind of your balance sheet, right? And wherever it's written you stood first or second or third, that is your profit and loss account, whether you were going good or you were going average. While the trial balance is just total of just the marks, nothing else. You haven't been compared to others yet. While the balance sheet is the ultimate thing that gives you a position in the organization in terms of the not only the present organization situation, but also the past that the organization has gone through. So the position statement is basically the balance sheet which talks about the assets and liabilities of the organization. So it's going to be balance sheet. The closing stock is entered into trading account, balance sheet, P&L, or both A and B. The closing stock is what exactly? The closing stock is basically an asset which talks about this asset is saleable. That means by the end of the year, we produced a lot of goods. So a few of the goods couldn't be sold. So what did we do? We recorded the closing stock in such a way. There are two places where we recorded. First of all, when we purchase goods, whatever purchases we are making, it's called opening stock, right? Whatever we had in the beginning of the year, then whatever we purchased during the year, that was our expenses. While when we talk about the closing stock, it's something that we have by the end of the year after making the sales. So first of all, whatever we couldn't sell, the expenses of that particular thing would be reversed because it's not being sold yet. So it is basically a part of the trading account as well, but it's also a part of the balance sheet because it's an asset which would be there in the business for a long period of time. At least for this year, yes, it's gonna be, because the stock is not sold on the very next day that is produced. It takes time. So it may take 1 year, it may take 2 years, whatever the time may be. So it is both A and B. Here comes the next question. It says the revenue expenditure is redirected to the following accounts: profit and loss account, balance sheet, partly to partly to P&L or trading account. Okay, when we talk about the revenue expenditure, it is basically the expenditure that we are incurring in order to earn money. That is something which we define as revenue expenditure. In order to earn, I have to spend. So that is what the revenue expenditure is all about. So it talks about what the business is exactly making out of the entire thing, whether they're making a profit or a loss. But the revenue expenditures are written where exactly? Revenue expenditures are those expenditures which are incurred during the year to earn the income again during the year. So it is all about obsessed with this particular year, nothing else. While the balance sheet records all the assets, liabilities as well as the capital. So that doesn't really make a sense. The correct answer would be the profit and loss account, right? So in this particular account, we record our indirect expenses, all the expenses that we are incurring in order to sell those goods. That is what we define as indirect expenses. Okay, here comes the next question, everyone. Let's understand this topic. Basically, what happened is, in the beginning of the year, the organization had 10 units of the goods. During the year, they bought 40 units. Again, so currently they should be having 50 units, but they realized by the end of the year, they were just left with 7 units. That means they were supposed to have 50 and they have got just 7. That means the 43 units have been consumed during the year. Isn't it? That is how we find it. This is the way even the organization is going to record it. It says first is opening stock plus direct opening stock plus purchases plus the direct expenses minus the closing stock. The opening stock was of rupees 1 lakh. During the year, we purchased goods for rupees 50,000 and we didn't have any direct expenses in this case. This particular formula where we found out whatever goods were exactly consumed during the year, that is what we call COGS. 10,000 plus 50,000 minus 60,000. This is what our cost is. Our cost is overall 1,50,000 minus 60. It was rupees 90,000. Right? This is the cost of goods sold. The goods, whatever we sold, it's the cost. But the question says the gross profit is 10% of sales. It's not on the cost. This is what we have got as cost. And they want the question on the basis of sales. How do we find it out, everyone? How do we find out what is going to be on sales or on the cost? Now, to find out, the best way is we take it up in this way, that GP is 10% of sales, right? So GP is basically 10% of sales. How do we do that? The best way is to take up 90,000 is on cost. Then what can we do in this case is simpler way. Let this 10% is, how do we define this? 10 divided by 100, right? So I can say it is 1 by 10 of something. Once you convert it into a fraction, once we convert it into a fraction, this is our sales, right? If you have sales, how do you come back to cost? If I give you a selling price and I ask you to find the cost, how do you reach to that? That is selling price minus SP minus profit is equal to cost. So it is basically 90,000 was basically the cost. And from sales, how do we reach back to the cost? 1/10 was the fraction there. From 1/10, we would, in this case, we would reduce -1. This is one of the shortcuts that I'm telling you. The shortcut is whenever you are at cost, 1 by 10 is your sales, and you want to know the percentage on cost. How do we reach here? The best way is you reduce 1 from the denominator. It's gonna be 1 divided by 9. So that's how we find it out. 90,000 into 1 divided by 9. That is 10,000 is your profit. Whenever we are trying to find a quicker way of converting the profit or converting the profit on sales to profit on cost, how do we reach there? It's gonna be let the total cost minus 1. That will give you 10 minus 1 is equal to 9. That means what are we going to do? If this is the sales, then selling price minus profit is equal to cost. That's what we do here. That means if it is 90, it is 1 by 10 of sales, it would be 1 by 9 of cost. So it is 90,000 into 1 by 9. The profit was of 10,000. Correct answer is 10,000. So the crux of the story is if you have 1 by 10 as your sales, then whatever the fraction on sales would be, whatever the fraction would be, if this is say 1 by n, right, and you would like to reach 1 by the cost, what will you do? You will reduce the minus 1 only from the denominator, not from the numerator, just from the denominator. It will give you the cost area. Then Abacus Limited follows a written down value method of depreciating machinery year after year due to consistency, convenience, comparability, or all of the above. Abacus Limited follows written down value. An organization is following a specific method. This is also in the module A. This is something that we'll be talking about in the upcoming classes as well. Written down value method. An organization is following a specific method. That means they are looking forward to that particular method. For what reason? Because of consistency, convenience, or comparability. The reason is consistency. Why? Because in the year 1 they are using method 1. In the year 2 they are using method 2. In the year 3 they are using method 3. Is this really consistency, or they're just looking forward to just one method? This is not consistency. Even if you switch from method 1 to method 2 and you continue with method 2, that is what we call consistency. If you keep on switching, that is not consistency, and that makes it uncomparable too. Okay. I think this is a question that we have done already. So just a revision there. A company lost its vital machinery in an accident on 2nd of March 2011, which will be adverse impact on its production capacity. As a result, it is likely to lose business to its competitors. The company needs to disclose this fact in its annual report ended on 31st March 2011, because of which principle. See, by the end of the year, on 2nd of March only, the organization knew that they are facing major problems, and from these major problems, in order to get done with it, they have to do something about it. So basically, as a result, it is likely to lose business to its competitors. They might lose it to the competitors totally. How do they come out of it? The best way to come out of this entire scenario would be they need to work upon this, and they have to disclose it completely. Okay, there comes the answer. They have to disclose it completely to the people that yes, we are facing a problem. But is it really important to disclose or not? That is what their call is. Whether it is important to tell people that yes, we have faced a loss and that might need to an end to the organization. Yes, we are supposed to. That is what they call it: materiality concept, money measurement concept, or full disclosure concept, or money measurement concept, or the full disclosure concept. The correct answer is materiality concept. An example of the preliminary expense is revenue, expenditure, capital expenditure, deferred revenue, or their capital in nature. When we talk about preliminary expenditure, these are those expenditures which were incurred by the organization before it was born. So basically, before the organization was built up, there were certain expenditures that we were required to incur. That is what we call as preliminary expenditure. So this expenditure basically is noted together first. That say I spent 1 lakh, and then they say once the organization is built, after that take 5 years and divide it and eliminate it altogether by the end of the 5 years. So 20,000 will be eliminated every year in order to close this account. Right? So that is what we call as deferred revenue expenditure. Okay, so this is it for the day. I hope we have learned a little more about the particular examination, and before we move forward, I hope you have reviewed our website yet regarding the JAIIB and CAIIB examinations. All you can do is you can go on to the area of JAIIB and CAIIB, and you can look forward towards the JAIIB and CAIIB ka Mahapack. Under this Mahapack, what you can do is the double validity is still going on. In this case, what you will get is, in terms of this pack, you have got 1100 hours of classes, 303 test series, 905 videos, and 329 ebooks. Right? So this is what is available for you. There is a 12-month validity. That means double validity means you will get 12 plus 12. All you need to do is use the code Y541 and you will get all these courses for just at 81% discount plus double validity. What is this JAIIB and CAIIB ka Mahapack includes? JAIIB and CAIIB ka Mahapack includes every single batch that we are covering for JAIIB and CAIIB. That means case study batch, syllabus batch, revision batch, power pack batch, whatever you think of, numerical batch, test series, everything is opened up for you. Not only for JAIIB but also for CAIIB. Not only for the English medium but also for the bilingual. So whatever you feel free, every single detail that we are adding for the next 2 years in the JAIIB and CAIIB area would be available for you. So if you're looking forward to that, then kindly hurry up and review it on our website or in our app. All you can do is click on the area of buy now, use the code Y541 and apply it. So you'll get it at 10,799. That is what you're getting at 81% discount. So hurry up and check it out on our website now. Thank you, everyone.